Let's get back to the markets. Alissa Coram joins me now. Alissa, we have a lot of interesting reports coming out over this week, but the most interesting was what happened to the big tech companies, in particular Alphabet, which just reached a new high, and it's now a $2 trillion company joining that group. What do you think is happening with big tech? They're saying interest rates be damned. We're going to continue to make money hand over foot because of AI and other things like that, right?
Right. I mean, you've seen the market rallying all year long on the Fed rate cut hopes, and we've seen that picture changing a little bit here. So it seems like the market's fate hangs in the balance of what these mega cap tech stocks have said and the reactions to their earnings reports. Meta, not a good reaction. So then it seemed like, all right, can Microsoft and Google save the day? Well, for now, it is a favorable reaction. But after last week's really terrible break in the market, marking a character change from that strong, steady uptrend that we saw since November, these stocks have a lot to prove. I don't know if the whole market can rally just on the backs of a couple of stocks, but they've done it before. I think where we close today is pretty pivotal.
But the incredible thing is interest rates be damned. We had another uptick in inflation report and the PCE report today, and year over year. It's pretty clear, as Powell has said, and Austin Goolsbee and other members of the Fed say, they are still going to be sticking to the 2% target. It's going in the opposite direction. It's going further away from that 2%. So interest rates are good. They're down a tick today. I understand that because yesterday, huge jump. But again, it's not affecting NASDAQ. It used to be so sensitive to interest rates. Are they completely over that?
Well, we are in the thick of earnings season, and I think what's most important for investors to look at are how leading stocks are acting and the indexes are acting and how they're responding to this data, whether it's favorable or unfavorable, because sometimes you can get negative data. And if you can have a strong market despite that, I mean, that's a real signal of underlying strength. But the picture is a little unclear here because of that bad break. Usually when you're looking at historical markets, they take a little bit more time to heal. They don't always immediately snap back, but this earnings season could be that game changer. But I think there's a lot to prove today. We're coming up to key resistance levels in a short-term perspective. So can we have a strong close, or will we fade by the end of the day? Will those concerns on the economic front outweigh these strong tech earnings? We'll have to see by the end of the day.
Well, and as we were talking, NASDAQ came even closer to that 2% level, up another 2%. And again, interest rates are probably going to go up as a result of this new inflation news. Alissa, thank you so much. I appreciate it.